Hey everybody, hope everybody is doing well. Well, as you can see here, the markets are looking pretty good. They have been rising in the last few weeks, last few months, as I've pointed out before. A lot of optimism is coming back, fears is coming down. Earnings are looking pretty good. And before I move on, I just want to let you know, I just came back from a trip from Carson City, Reno, Tahoe. And me and my team, we were getting things done. I'll have more videos about that pretty soon. I've also confronted many of the legislatures in our state. They got pretty scared. I'll have more and more updates about what's going on. And not to mention, we had some record rainfall here in Las Vegas. So what's going on? Well, as I have mentioned in my December video, what do I really see coming in? I just don't see the probability of the market continuing to fall at these very high levels that we have been seeing for a while into the next several months. I do see that 2019 potentially becoming a year that we rebound. We have not seen a lot of companies miss on earnings. We have to see a lot about that, and then we can see the stock market start to contract. We also have to see bad economic data, and we're still having lots of job growth. That I was pretty optimistic about the stock market. The downturn, a lot of overreaction has happened. Just the aspects are not in the current condition to pull the markets down so much in terms of a significant economic slowdown, in terms of earnings that are struggling at that time. So that's one of the reasons why we start to see the stock market pull up. And yes, we do have some economic issues. But then again, you look at the jobs number, the GDP numbers, earnings are looking pretty bright. See, earnings is halfway over. Results are surprisingly strong. So this is one of the things that you have to keep in mind. And then you look at these trend lines. Nevertheless, it's looking pretty good. We're going upward on this pattern. Let's zoom out a little further. And you can see in this long-term trend that we've been doing for several years. Let's go to the 5-year chart. You can see here we've had this nice run up from 2016-17 all the way to 18. And we'll see if we touch this line. This is one of the main indicators that you really have to look at. And let's look at other asset classes. Let's look at some companies like MGM Resorts International. Now, this company's been struggling quite a bit. As you know, that these strip operators have been charging for parking, resort fees, manufactured events like the Route 91 shooting. Well, that has caused a lot of visitors to stop coming here. In this article, which I will talk about in a future video, where they talk about fees are not the main reason why visitation is cutting down, there's a lot of other factors you have to keep in mind. So once we look at the company, it hasn't been doing very well year to date. Let's take a look. Nope, not too well. 5 years, not so promising. Let's take a look at other asset classes. Crude oil. As you can see here, we had a huge run up in the last several months. It's affected gas prices, especially here in Las Vegas. We're one of the highest. I've done videos and will do some more videos later on. But look at this. It's been pretty flat in the last several weeks. So we really have to see how this goes on. I see this going down to the $50 range. Let's look at the gold markets. Now, a lot of the people who are gold pumpers, doom and gloomers, dollar is going to collapse. A lot of things are going to get pretty bad. Well, they said, well, just get into the gold market and all that. Well, as you can see here, it's not done pretty well, and I believe it's going to struggle in the next several months and years. Let's take a look at The bond yields, as you can see here, it's at 2.53. We certainly had a significant drop in the last several months. Still higher than it was in 2016. I think the drop has gone out too far. I think the rates, whether it's bonds, a lot of different factors, mortgage rates are going to continue to go up. Now, let's compare that with many of the other index funds. S&P 500 and Dow Jones, as you can see right here. Now, in the last several years, the Dow Jones and the S&P has not done too well as the NASDAQ Composite Index, considering the fact what kind of companies are in it. But the NASDAQ certainly has a lot more volatility. Now, if you look at the 6 months chart, you can see here that the NASDAQ obviously had a sharper drop, but it had a sharper rebound. But this is one of the reasons why people don't get into the NASDAQ, because of the volatility is too much. There's just too much risk. So this is one of the things that you have to keep in mind. Now let's get out right here. You can see here, relative strength indicator. It's kind of looking oversold, although I really would not rely on this system. And basically, well, what's going on? What do I see in the coming months and years? If I were to make a short-term prediction in the coming months, I am looking pretty bullish in the overall stock market. Now, there are some bearish factors, which I'll get there later on. I don't see a huge spring, May correction. We just haven't had one in March and April. And usually we don't get corrections in summer. We had a significant crash or correction in last fall, and we don't have another one the following year, so I don't see a fall 2019 tumble. So for the rest of the year, considering how 2018 was not so great, I'm looking pretty bullish. Then again, you have to look at earnings. Now, in the medium term, do we have some economic problems? And the answer is yes, we do have some economic problems. And I'll do videos about this later on, about a slowing housing market. So let's take a look at what is exactly going on. You can see right here, let's kind of go ahead on some of the pages. And housing prices in Southern California has fallen for the first time in 7 years. Now you got to know this pattern, because in 2006, that is when I believe that home prices were starting to fall, and it was in California. And so we saw what happened later on. Basically, people stopped buying homes, home sales started to get hit, jobs were lost, earnings were lost, and it started to affect as a domino effect with the entire economy, and then the stock market crashed in about 2-3 years later. And is that possible going on into 2020, 21? That is certainly a good possibility. Now, again, one of the things you have to keep in mind, though, is that the mortgage rates are a large factor. So if they rise, there's a good possibility that there's going to be a quite significant downturn. Now, how large a downturn is going to be, that is very difficult to say. But I am not looking too optimistic for 2020 and 2021. It's hard to say which year is exactly going to be. Could it be both? But I do see a coming downturn. So medium term, I'm not looking as bullish. In the long term, in the next 5 to 10 years, I am looking bullish for the overall stock market. And then once again, and I wanted to point this out, that this is not financial advice. I'm telling you what I would do. I try not to rely on many of these media pundits. And sure, there are some points made by Mike Norman that are pretty reliable, but he have made some pretty wrong predictions in the past. So this is going to be pretty exciting. Ladies and gentlemen, let me know what you guys think. What do you guys see the markets? Please share your thoughts. We'll have to see more earnings as the weeks come by.